want to go back to what you said about the volatile bull market. How volatile, though? Quantify that for us, considering that we're relatively insulated. Anyone I speak with, economic planner, even a market analyst would say we do have some insulation from what's going on overseas. So how volatile is it if it is a volatile bull market? April.
I think in terms of economic indicators, probably, let's say GDP growth. I don't think it will be very volatile. The main strength that we have, I think, compared to other countries is what they call fiscal space, monetary space. So in other words, the government, for example, has room to spend a lot more. Okay, because of course taxes are picking up, economic growth is strong. Central bank, after raising rates by 175 basis points last year, and of course with inflation going down, and now supported again with the loose monetary policies globally, again has also a lot of room to cut rates. So from that end, I think GDP growth natin medyo safe.
Safe? What's safe? I mean, we just heard from ASEC earlier, Tony, making a mention of 6 to 7%.
Yeah, I think I'm quite confident we can do 6 to 7. Except maybe 2Q might be bad. No?
Why?
Because
he was predicting a recovery because the budget already got
but
passed.
second quarter, kasi di ba may construction ban because of election. Second quarter, and then there's some anecdotal evidence that seems to suggest second quarter will be weak. Like the budget deficit is much lower compared to last year. And then aside from that, the two banks that came out with earnings saw much lower loan growth. So may mga anecdotal evidence na nagsasuggest na medyo pangit ang second quarter.
So gaano ka pangit?
Maybe it's still like 5 to 6%.
Oh, not so bad. I mean,
not so bad, yeah.
Compared to ASEAN
But not
nations, we're still fast growing, but not
the 6 to 7,
6 to 7 not
that
yet.
we would like to see, right?
So
yeah, I think yun, the problem is, di ba, ang kahit bullish ka pag medyo nag-announce lang ng bad news, bebentahan agad yung stock market and the individual stocks. So,
is that what you're seeing now, Juanis? I mean, if indeed GDP is coming out on August 8th, no, it's coming out a few hours before the Philippine Central Bank makes its decision. What do you typically see? Do people really sell kaagad? Is that the psychology in the markets right now, given the kind of fundamentals that we all harp about?
In the last few announcements we have, I didn't see the market react too badly before the announcement came out. It was surprising that the market gets jarred. Because I think people are pretty much quite well in their ability to anticipate what the potential. I mean, these guys have their sciences down to the hilt already, so I don't think it's going to be too far from where expectations will normally lead. And that's why I don't think the volatility comes before. It'll more likely come after if it is very surprising.
What's very surprising? Well, what are you
You're
targeting?
Let's say that if you're talking about maybe a half a percentage point further from what you say. So if you're talking about what's the anticipated rate that you guys are looking at, let's say if you're anticipating a 6 and it goes out to 5.7 or lower, I mean, I think that's something that the market is not anticipating. Everyone's looking at 6% over.
And you're looking at the Fed. You made a mention of that in your presentation. How deep could the cuts be, given that they're more dovish than they ever had been?
Yeah, so I think the market have already priced in the cut taking place. So if they don't come out and show to the rest of the market that they're going to have the 3 or 4 cuts that they're saying after this, then I think that's where the market is probably going to recoil back quite severely. But if hopefully they give the market what they want, but with the prices already building it, that means whether they cut it or not, I'm still anticipating a correction there.
And you made a mention of sensitivities and not the decoupling. Are there any indications that there could be a decoupling, given the risks that we're seeing really are more targeted towards those most affected by the trade war, for instance?
If you mean decoupling for the Philippines?
Yes. Like, for instance, I mean, the Wall Street is now at record levels.
Yes. I don't think we will decouple. I think what can happen is perhaps we won't be as sensitive into a correction, right? Because, I mean, I think the underlying fundamentals are there to back us up. And so pullbacks here will be more restrained than what maybe other markets may have to be able to whip back to.
And April, coming back to the Philippines, because it's a more positive picture when it comes to the economy. The deficits, that really stood out. How much of a concern should that be for investors? Why should they keep an eye on the twin deficits?
I think it has more of an impact on the peso and potentially interest rates. Because of course, if you're in deficit spending, okay, if you think about it last year, medyo bad din yung timing na nag-deficit ka ng close to 3% eh. Because you have strong economic growth, higher, what do you call that? Higher spending capacity from consumers. So talagang very inflationary, and then you have the government now also borrowing money. So it's, a traditional textbook definition of crowding out eh. So you have the banks close to the 80% LDR at that level, which is the reason why interest rates really shot up in the secondary market kasi sabay-sabay lahat gumagastos. So I think that's one part of it, and another part is, yun nga, what economists have highlighted is you have no choice but to weaken your currency if you have those twin deficits, a current account and a fiscal deficit.
So if you have no choice, then the Bangko Sentral would be forced to cut rates earlier in order to weaken the currency.
Kasi no choice but for the currency to weaken. But if the currency weakens, then the BSP may not be allowed to cut rates. Pero I think
I see.
the plus factor is this time around, assuming that the deficit stays big and then the current account turns into a deficit. Di ba last year, the backdrop was you also have central banks globally raising rates. Diba? And also inflation rate going up because higher food prices and higher oil prices. So this year, wala na tong tatlong factors. You don't have global central banks tightening, you don't have rice prices going up, and you also don't have oil prices. So may offset siya. So I think in that perspective, at least, what's happening globally is gonna help the Philippines prevent a repeat of 2018. Mas may space talaga this year.
But then that leads us to the discussion of yield differentials. I mean, if the Fed cuts a lot more and maybe the Philippine Central Bank does not, what would that mean for the flow of money? Juanis, what are you seeing?
Well, I am not in the perspective that the Fed might cut by extremely deep amounts. I think they've had some rally with their rates. They might just cut it, but I think they're waiting to see if this global slowdown will actually manifest towards the end of the year. And they will use that pullback to be able to stimulate their economy right away. But I really don't feel that it's going to be by a massive amount. So I don't know what we're going to be falling too much to follow on in terms of the Philippines. In fact, we have more space, right, rather than they.
Well, I just want to highlight lang on the weakening of the peso. If you think about it, a lot of countries around the world actually want weak currencies because it helps make exports more competitive, attract tourism, like even for us, the PO sector. I think the problem was last year you depreciated by 9% in a span of, say, 8, 9, 10 months. So what you don't want is to anchor expectations of people na pataas na or pawiken na yung peso parate, or consumers always think prices are gonna go up. You want to anchor the expectations and create some sort of stability na, okay, if it weakens, it will just weaken a little bit so that at least, when businesses make plans, they can make reasonable plans. They
So what's weaken a little bit? What is acceptable right now for planning for business?
Maybe a 1 to 2 peso weakness in
So since
12
we're 51,
months,
it's
no?
52 to 53.
Hindi yung, di ba, yung mga sensationalized, na,
54
okay,
over.
55, 60, ganon, from
May
a
60 na ba?
51, di ba?
Hindi ko pa
Yung mga
narinig
ganon.
yun.
So, you don't want mga sensational headlines like that, di ba? And then, of course, what will happen is people will just buy dollars and,
So I just want to clarify, it's really the pace that you're concerned, the pace of the fall. That's what you're trying to manage, because the other narrative is that if the local currency weakens, it's good for exports.
Yes,
It's
yes.
always been the narrative. That's why when our currency strengthened, umiba naman Naging maganda para sa mga domestic consumers because they have more purchasing power.
Yeah, and also the imports, because of course, for example, we
Of
import
course.
oil and other
And
stuff.
the triple B capital equipment
Yeah,
and
yeah.
all that comes into
Yeah.
play. When do you decide on strategy? Given those assumptions, how do you create that narrative technically? If you were to come to a client and tell them what the second half is going to look like, how will it be? Juanis.
I think April's position is really how stable will your currency be? And if we feel that the volatility band that she expects is going to be too wide, then that's when we have to really draw on, for example, the discounts that we normally look for stocks to buy. We do a deeper cut in terms of discounts just to factor in what volatility that we are looking at into the currency. But if there is none, and we're talking about 1 peso difference, it's really not that much. It should not jar any of the things that we're doing in terms of our analysis.
So if that's the case, what would be the biggest risk then to your technical analysis for the second half?
I'm looking more external. These are more
External.
from the US, yeah, maybe parts in Asia, maybe even Europe, because that's a potential problem coming out.
So that's more volatile. We can't control that.
No, we
it's,
can't.
It's something that the policymakers would have
Yeah.
to.
But how resilient is your
gauge.
local economy to withstand the corrective pull that those other markets bring on? Now, maybe other Asian markets might fall weaker to that, but since we have our fundamentals intact, we may not really bear the brunt of that pullback so much.
Do you think the same, April?
Yeah, I think, just to put things into context, I think let's go back to 2007, 2008.
Financial crisis?
Yeah, at that time, I remember, for example, in the property sector, people were really very worried about, first of all, BPOs pulling out of the Philippines because of the GFC, and also OFW remittances drying up, which obviously did not materialize at the time. And what happened was initially the Philippines went down a lot, but when it bounced back and recovered, it did it so fast, and it's like, oh, it never happened, so we were just worried for nothing. So maybe if we see some volatility here because of all these concerns, it might be a short-lived volatility, but if the numbers prove that those aren't major concerns, then we can sustain the recovery and bounce back right
But
away.
where does the Philippine Central Bank stand now, given what you're seeing? What is their role? Should they be proactive, or do they really have the time, the luxury of time to just sit it out, wait it out, and see how things flow and go? The Fed is meeting next week, and the Banco Central meets on August 8th.
Yeah, I think the BSP has the luxury of time because the domestic economy looks fine, and we're not as sensitive to exports anyway. And in fact, the Philippines, along with Southeast Asia, is expected to be a beneficiary of what's going on in the U.S.-China trade war because businesses are actually thinking of diversifying away from China and relocating some of their production facilities in Southeast Asia so that they can still export to the U.S. No? Unfortunately, the Philippines is not the most competitive location. I think the major beneficiary right now is Vietnam. But that said, I think the tax reform programs, the package 2, 3, 4, which will make ease of doing business better in the country, make us more competitive, that will allow us to attract these investments. Medyo timely yung balak ng gobyerno.
Pero ma-achieve ba? I was asking this to ASEC. Tony, we have 3 years to go. It was so difficult to have passed the first tranche of the tax package. How can markets manage their expectations? The government is rightfully bullish, but our investors would want some reasonability here. Your thoughts?
Yeah, I think worst case scenario, the infrastructure is there. So that addresses one of the key issues that he highlighted.
Yun 75? You think all 75 big ticket projects
Well, those that
will be completed
those
in 3
that have
years?
been started on, most likely, we can complete them at
And
least.
that's going to be enough to keep the markets optimistic.
I think so. I mean, can you imagine, like, while you're spending on infrastructure, the only positive thing about it, of course, is the spending that you're doing. But once it's complete, yun nga, the multiplier effect, the productivity that will be improved, will manifest itself and you don't have to spend anymore. Di ba yun nga problema while you're spending? Parang sabihin, ang baba ng ROE mo kasi nagka-capex ka, di ba? Hindi ka pa pwedeng mag-benefit. But once it's laid down, you don't have to spend anymore, then, productivity comes in. Then you'll have, for example, an EPS growth already because more consumers are coming in. You can hire more people, So I think that part, at least, is okay. And another part is valuations. Mababa naman ang expectations ngayon Hindi naman bullish ang tao. So with the expectations very low, that's easy to beat. So that's good for us.
What's kept the expectations low? Why are we coming from that level?
I think fear, concerns, and in the past several disappointments. Earnings growth, for example, if you talk to a lot of people are saying, I think especially foreign investors will say, your GDP growth is so fast, how come EPS growth is single digit, no? But if you actually view the companies, I think the main issue is a lot of capex spending is taking place right now, and the nature of it is the earnings will not come in right now. It will take a while for them to come in. But once they're complete with this capex spending, then we're not spending anymore, but the earnings are just gonna trickle in.
Relative to ASEAN, if you've done the charts for maybe ASEAN peers, are we as competitive?
Right now, the Philippines maintains a very, on the technical side, actually stronger than about 80% of
By
many of them.
18?
No, 80% doing better than the rest.
I see.
And
How
so-
come?
Well, like I said, I think the backing of the local fundamentals is what kept us alive. And maybe also because we didn't rise as quick in the beginning when the rallies came. So we came up there and we were more sustainable on the upside than many of the others inside.
But we could have been better if we had those foreign investment
Of course,
laws that attracted so much investment to Vietnam. They could have come to us.
Yeah.
So the benefit could have been more.
Yes.
So do you think 6 to 7% is still something that investors here can hope for as a GDP target? Juanis?
Well, I'm not an economist, so I would as the economic managers would probably portray, they're probably right. I think even the current readings of some economists who came up were also leading reductions, but maybe even at least at 6%. So I don't see why that's out of the way, especially with these new projects coming in. By the way, I was wondering why nobody clapped earlier when the ASEC announced that they were reducing the stock transaction tax. Maybe you guys were eating a while ago and
Yeah,
you
because
didn't
masarap
notice
yung pagkain There was salmon.
that they were going to reduce it from 0.5% down to 0.1%. And I was about to stand up and applaud and nobody wanted to follow me and I was scratching my head. You guys like expensive stock prices?
But that would make a big difference.
Oh yeah, very helpful to the investor community. Very helpful.
Has it really improved? I mean, 1% of our population invested in the stock market. We would have wished a lot more of a broader base. That's always been the story for many years on out. But with this kind of bull market, are we seeing more participation, more interest? And the stock transaction tax, would that help build more interest?
I think so. I mean, of course, there will be a lot more initiatives that we would like to be able to come up, like
Such as?
opening an account is very difficult. You have to produce so many things to open an account still. And we were working with the regulators to try to show them what, I wish that ease of doing business could hit us as well.
So it hasn't affected...
We are working with them,
or-
so
okay.
hopefully we can...
How many signatures or permits? I mean,
Lots,
we've heard
lots.
of like lots, 29.
Lots.
Like they say in other industries, it could be 100.
But there is that initiative moving forward. I'm glad to have, to see it. And Mr. Marvin Fausto is one of the guys who's a key underpinning and doing that thing. So thank you, Marvin. Let's hope for more.
We have about 90 seconds to go, and I know that we have Slido questions. Slido is the app that allows you to ask questions to both Juanis and April. So I'd like to see on the screen which have been vetted. This has been vetted by our COL financial staff. Nagtanong ba kayo? O baka wala nagpasok ng tanong? Naku, patay tayo niyan. You'll have to ask it in person. There you are. What's the possible catalyst to the PSEI to break out of range? From Frank Ngan. Thank you for the question. April.
For me, I think it's earnings. It's still earnings. I mean,
earnings for the third quarter
third
onwards.
quarter.
The second quarter
I
is
think,
pangit, like you say.
it's the economic indicators proving and even the numbers proving that what we're talking about is actually
That's there.
materializing. Yung strong second half GDP growth and resilience to what's happening overseas.
Okay,
Yeah.
next question. We have, what's your feel and outlook on the US dollar sovereign bonds versus stocks from Peter? Who'd like to take that?
Well, I think U.S. If you're looking at the bond market into the U.S. as compared to stocks, I guess they're really waiting to see how interest rate plays would come out. So I think I can't tell. Even me, I wouldn't know how dovish they're going to be or not, right? So I would probably wait to see what comes up of next week, mid next week's decision to be able to align myself better. But I think potentially, I don't think it's going to be as dovish as what many people think.
So,
So that's why I'm
a
anticipating
correction
yes.
on Wall Street, so we
Yes.
have to brace for
Yes.
that. How about you, April? Do you have a view on it?
That's a very difficult question. When we talk and research about outlook on bonds and stuff, I mean, again, I talk about the global financial crisis. I remember in '06, even '05, people were talking about a bond bubble. But now, so many years forward, no popping of bond bubble has happened, diba? And in the same respect, I mean, even stocks, people were talking about how US stocks are expensive, et cetera, but continues to go up. I guess what's clear lang is, are we going to see a repeat of the global financial crisis? I think I can say with 100% certainty that although the market may go down, we're not expecting a repeat of the global financial crisis because we don't have the same systemic risk and the level of leverage that we had before. So, yun lang ang masasagot kong maayos. Pero versus the two, I don't know. I don't know which one's better at this stage.
That's fine. That's fair
Yeah.
enough. I know that you have a negative on gaming. If I remember correctly, here's a question on gaming with property pa. What's the midterm, that's 2 to 3 years outlook of Pogo, the Philippine online gaming operations, and how it affects the property sector? April.
Yeah, I think as long as Pogos will be allowed to stay, okay, then it's good for property companies. I guess the thing is, they're not gonna be coming in a big way that they did a year or two ago when they first came in. Kasi ang daming licenses na binigay. Maybe now the government will not give more licenses, but I think the good news is the traditional businesses which before halos wala, ngayon they are coming in and they're occupying these offices. So still positive. I think the beauty as well of the property sector right now versus before is that you only have a handful of players. So in a way, they have a feel of a good feel of the industry. And if they feel like there's just too much supply of offices coming in, they will just pull back on their own expansion, such that the rental rates will be steady and will not go down substantially.
But there's BPO, so
BPO is
that
still here.
could manage the
Possible,
supply.
yeah.
Yeah. So what will be a key driver you think going forward? Is it Pogos or BPOs for property?
For properties, I think actually even the BPOs medyo bumabagal na rin ang growth kasi nagmamature na tayo eh. Right now, what's growing fast really is traditional businesses, which in the past, medyo they kind of dried up. But that one is picking up right now. So if you actually think about it, for property developers like, say, in this area at least, Ortigas, Ayala Land, in the past, they never built offices na catering to traditional businesses that they sell to retail investors like ourselves. But now they're doing it, surprisingly. So it means that talagang may pick up sa traditional, which is very good because hindi naman pwedeng puro BPO lang tsaka Pogo, di ba? What about us and our small businesses, di ba? We also need office space.
Here's a question on targets. Is the bull market run sustainable? Why do you think the market value and participation is low? From Lito. Juanis?
You can ask the same question to the U.S. Do you know that despite the U.S. making new highs, that we've recorded the biggest amount of outflows from equity funds up to today. And yet, the U.S. continues to go into a new high. And, well,
What
you've got
explains that? Have you
repositioning.
figured it
Well,
out?
they have certain algorithm tradings that are taking over much of what's happening, and that it continues to keep money flows going back in despite the pullout from more individual type of monies. But I think over here we will continue. Participation remains to be low, yes, and we hope that the initiatives to level the playing field, change things to become more easy, should be able to complement the style of allowing the businesses in the Philippines to be able to restore the capital market. But I understand that question very much. Long time ago, when I began in this industry, we would get daily average volume trading at 7-8 billion in a day. It's been 20 years, there's still 7-8 billion a day.
It's the same
Whereas
pa
if you
rin.
look at other markets
Right.
around the world, it's 10, 20 times bigger. And that's the sad thing about it. So we're working hard to trying to change the sentiment of the people and how they look at things. And hopefully, little by little, that we will, and with the work with the local government doing things, should help.
April?
Yeah, same with Juanis, but for me, it's more fundamentally, I think economic growth is sustainable. And, you know, um, I think consumers also, as highlighted by Asek Lambino, we have the demographic dividend. So I think if all else fails, you have the consumers who will continue to spend
Yeah.
because of that demographic dividend. So from a fundamental perspective, looks okay. Not too worried. So at least that part, okay. The others, I don't know.
Okay. We have a question here that asks you to venture into your own opinion. There have been speculation that Trump will devalue the dollar to stimulate the U.S. economy, which will trigger a currency war. How will this affect us, given that BPO and remittances are dollar dependent? And how should we prepare for this, or how do we position ourselves? From Bogart. Juanis.
That's a question for you, April. But I heard about the move for Trump to try to depress the dollar to fight what China has been doing, and they say it's actually ongoing already. Unfortunately, the graph I showed you earlier, which is the U.S. dollar index, is not sympathizing to that thought, right? So I'd maybe worry about it if I actually see evidence for it. I think it's all speculation, and I haven't seen evidence of it, so I'm not really too worried about it. I think the U.S. economy will take care of itself without too much master plan by the President Trump.
April?
Yeah, so right now doesn't look like a concern, no? Pero, in the past when we were really talking about this, I think one of the conclusions we came about is hindi naman gusto ng mga Amerikano yung BPO jobs. They're more interested in, say, manufacturing jobs, not so much the BPO jobs. I think a greater threat would be AI, for example, 'di ba? The need for BPOs baka maging less, 'di ba? And because of AI. So I think maybe at this stage that's a greater threat for the Philippines. Pero marami namang iba na pumapasok, let's say the headquarters, operations, may mga lumilipat. So I guess in a way it's also good that the government is trying to boost the competitiveness of manpower so that being cheap is not the only reason why they are staying here. It also has to be because people are more productive, and there's also more manpower to hire. Unlike, diba, yung mga complaints nga ng BPO, it's so hard to hire people right now, diba? So at least pag mas competitive yung manpower, they can do more things. So it will compel them to stay even if we're a little bit more expensive.
Here's a question that, they've changed the question. Now it's still overseas. With the ongoing trade war between the U.S. and China, tensions in the Middle East, and our own West Philippine Sea issue, how would the market fare come 2020? It's all geopolitical.
Yeah.
From Rick.
Well, my thoughts is nobody wants this trade war to escalate or prolong itself. Even the Americans. They're using it to be able to twist the arm to get a certain result. And I feel if push comes to shove and it comes to to the threat that American businesses may deteriorate more, I think they'll pull the plug on the issue and try to restore things as the way they should be. So this is just positioning by both sides to get what they want. But like I said, at the end of the day, if it threatens the economic situation of both, I don't think it's going to be extremely long-lasting, although I know it's hurting American businesses today. So I think foreign outflows from the Philippines, maybe not so much. I think I've heard you say that it shouldn't hurt us too much in terms of the U.S. trade war, right?
Yeah, our economy is not too sensitive. How it may affect us is more of contagion. If global economy, global markets weaken, then of course we will be affected. It's more of that rather than us being affected directly. So that's at least my view. And in terms of the economy, as I've said, the government has a lot of fiscal space. We also have a lot of monetary space. So a lot of tools, in other words. Unlike some countries, hindi na nila alam kung anong gagawin nila or ano ba pwede nilang gawin. Lahat ginawa na nila. Tayo marami pang pwede. So at least that should bring us a little bit of comfort.
Here's a question on the infra spend. If the government infra spend picks up in Q4 and the dollar gets stronger, would that trigger net foreign outflows because of a weaker peso? And this comes from Hero, and it'll be the last question. Juanis.
I think this is more
Okay,
for...
April, go ahead.
Yeah, unfortunately, there's a chance nga na yun ang mangyari. Pero I think the threat right now is much less. Because if you think about it, last year, if you made that rhetoric kasi, for example, in the US, they were really tightening every quarter, tightening rates. And di ba nung December pa sabi, we will raise rates again by 2 times in 2019. So everybody, the consensus view was strong US dollar and higher rates in the US. So it was a no-brainer. People wanted to buy the US dollar. But right now, you have a dovish Fed. So medyo teka lang, pababa yata ang rate sa US. So, you know, the argument is not as straightforward. So medyo nagdadalawang isip din sila. And of course, there's the prospect of a weaker economic growth in the US and overseas. So it's not as easy, or the argument for why they should move out of the Philippines into the US is not as straightforward as it was in 2018 when economic growth in the US was strong and the US dollar looked like it was just going to strengthen and rates there were just going to go up. Now it's not the same. It's not as easy.
In closing, just give our audience here who have come on a Saturday morning a takeaway for the weekend or maybe for the second half of the year. The presentation is entitled "The Long and Winding Road Ahead." I don't know if there's going to be a road, but certainly they are making a way to make that road. Give us your outlook. Would you be more optimistic or less so for the second half this year? April.
Yeah, so I think the key takeaway is, you know, domestically everything's okay. The problem is, of course, it's very volatile, or I feel like there is a lot of uncertainty, and a lot of that is coming from overseas. And you know, I mean, I wish I could tell you what really can be expected going forward, but you know, looking at the risks and the pros and the cons, I think net it's still positive. So in that respect, I still think people should stay invested in the stock market, but then that said, control the risk by managing your size. This is not the time to be too aggressively invested in the market. Just control your size. Proper asset allocation only by using your long-term money. And of course, be conscious about values. Don't get too excited when stock prices are going up and chase it. You know, let's wait for prices to pull back before coming in.
Yeah.
So Jollibee.
Yeah.
Juanis?
Well, again, I agree with April with keeping ourselves aligned into the bullish approach. We're in a situation where interest rates are being brought down, not being forced up. That's your first positive. Late last year, we were the opposite. Right? They were trying to chase by pushing rates up because they were worried about inflation. April said all those three things have already been cleaned up. And so now we've got a situation where rates are coming down. They're still trying to bring it down in the US. We may still bring it down here. And that should unlock a lot of still money flows to be able to, for investments. And that should keep things quite pinned into the bullish side. Now, yes, there are uncertainties. I feel many of them coming from external factors, like I pointed out earlier. These will cause the headwinds, and that's why, like it says there, the winding road is really what we're going to have to drive through for the rest of the year. But I still am quite optimistic. The technicals are still in favor of that bullish approach, and as long as they maintain that, then I will keep myself situated in that direction.
Oh, it's good to see that it's a nice, smooth road, walang lubak. So that's promising. And I hope you've come away with more optimism and using that optimism for smart investing. Thank you so much for coming on a Saturday.
Thank
Good
you very
afternoon.
much also. Thank you.
Thank you
Thank you,
so
Calvin.
much.
Thank you.